Hi everybody, this is Lara with your end of the week video analysis for US oil for the trading week ending Friday the 7th of September. Oil looks like it's in an intermediate degree fourth wave correction and the structure doesn't look complete. I'll be expecting sideways movement now for another 6 weeks. For the very short term, it looks like some upward movement may develop next week. The target is at 73.82. If it reaches up to 74.18, it could possibly make a new high above 75.26 as part of the consolidation. An overshoot of resistance may occur before the upward swing ends and a new downward swing begins. Price is swinging from resistance to support and back again. Elliott wave count first, classic analysis last. At the monthly chart level, I've only got one wave count now. My bearish wave count was invalidated by a process of elimination. I have very bullish analysis for US oil. And I've just noticed I need to fix my D wave label there. It should sit on this month here, not here. My analysis for oil expects it's in the early stages of a huge big third wave up at supercycle degree. From this high to this low, this is a huge big three-wave structure. Trying to see this as a 5 would be quite ridiculous. I mean, you could force it to fit, but it's a three-wave structure. With a three-wave structure downward, that means the larger trend for oil should be upward. And so now I'd be expecting a 5-wave structure upward. If this is a third wave, it may only subdivide as an impulse. When cycle 1 is over, the following correction for cycle 2 would be expected to be very deep and may not move beyond the start of 1 below 26.06. Cycle 1 is unfolding as an impulse. Let's look at this at the weekly chart level. It begins down here. An impulse for primary 1, a zigzag for primary 2, an impulse for primary 3 is incomplete. Primary 3 may only subdivide as an impulse. It's past 1.618 the length of primary 1, so I'm applying the next Fibonacci ratio in the sequence to the target, giving us a target at 106.25. When intermediate wave 4 within the impulse of primary 3 is complete, I will add to the target calculation at a second degree. At that stage, it may widen to a small zone or it may change. Primary 3 is unfolding as an impulse. That's the only structure it can be. An impulse for intermediate 1, a deep double zigzag for intermediate 2, an impulse for intermediate 3, and now a running contracting or barrier triangle for intermediate wave 4. Is most likely. It could also be a combination, and I have that charted at the daily chart level. We'll go there next. Intermediate 4 may not move into intermediate wave 1 price territory. Intermediate 1 has its price extreme here at 55.24. Let's take a look now at the first possible structure, a triangle for intermediate 4, where intermediate 3 ends this point up here. We could have a single zigzag for A, a zigzag for B, a double zigzag for C. This has a really good fit, and the C wave of a triangle is the most common triangle subwave. To subdivide is a more complicated multiple. Only one of the 5 subwaves of a triangle may be a multiple, and so now the remaining subwaves of D and E must be simple ABC corrective structures. At least one of those two must be zigzags, and they're both most likely by an extremely wide margin to be zigzags. Minor wave D may be subdividing as a zigzag, it may be incomplete, subdividing 5, 3, 5. There's a bit of weakness in this downward movement, and with a couple of long lower candlestick wicks now, it does look like a little B wave. A pullback may have been over here. And so I'm applying the ratio of equality for a target for minor D, for minute wave C to reach equality in length with minute A. The target is at 73.82. That target would see minor wave D end about here, and so the BD trend line would have a reasonable slope. If the triangle is a contracting triangle, then minor D may not move beyond the end of B above 75.26. But if the triangle is a barrier triangle, minor D may end about the same level as minor B, as long as the BD trend line remains essentially flat. To the eye, this is quite subjective. As long as it remains flat, a triangle will remain valid. In practice, what that means is D can end slightly above the end of B. This is the only Elliott wave rule which involves any area of subjectivity. This upper invalidation point is not black and white. When minor wave D is complete, then a final zigzag down for minor E would be expected to fall most likely reasonably short of the AC trend line. That's the most common point for E waves of triangles to end, and it can't move beyond the end of C below 64.43. And so choppy overlapping movement in an ever-decreasing range is expected for this idea for a few weeks yet, possibly another 6 weeks. If intermediate wave 4 completes in a total, I think, Fibonacci 21 weeks. Alternatively, it's the same to this point here, and it's the same on the weekly chart up to this point here, and now I'm looking at another structural possibility for intermediate 4. It could be a double combination. Too many times over the years I've labelled a triangle complete or almost complete for a fourth wave or a B wave only for price to turn around and validate it, and the structure turns out to be something else. I've learned the hard way when working with possible triangles to always consider alternates. The most common structure that it turns out to be when a triangle is invalidated is a combination. Combinations are reasonably common structures. The first structure in a double combination would be a complete zigzag labelled minor wave W. The double could be joined by a 3 in the opposite direction labelled X, because this X wave is so very, very deep, in fact it moves beyond the start of W, this could be a double combination, not a double zigzag. Double zigzags are sloping structures. Combinations are sideways. In order for a double zigzag to have a slope, the X wave is usually brief and shallow. In order for combinations to have a sideways look, the X wave is usually quite deep and sometimes time-consuming, but they're almost always zigzags. There is no minimum nor maximum requirement for X waves within combinations, no rule saying that they can't move beyond the start of W, and indeed sometimes they do. They're analogous to B waves within expanded flats. The second structure in the double combination may have begun here. Minor wave Y would be most likely by an extremely wide margin to be a flat correction, because in my research so far I've discovered that within double combinations, by an extremely wide margin, the two most common structures are one zigzag and one flat. I have found very few combinations where wave Y subdivides as a triangle, so let us expect the most common situation and not expect a much less common situation. Minor wave Y may be subdividing as a flat correction. They subdivide 3, 3, 5, and within the flat, minute B must reach a minimum 0.9 times the length of minute A at 74.18. The most common range for a B wave within a flat is from 1 to 1.38 times the length of the A wave, and I still need to fix that on my chart here. That should be 1.38. I need to get rid of that too. That gives us a common range for minute wave B of 75.26 to 79.38. When minute wave B is a complete corrective structure and it's met or passed its minimum, then this wave count would expect a 5-wave structure down for minute wave C to move at least slightly beyond the end of minute wave A to avoid a truncation, and minor wave Y would be most likely to end about the same level as minor wave W, so that the whole structure achieves its purpose of taking up time and moving price sideways. Let's take a look at some classic analysis now. The month of August completed with another long lower wick. That's a little bit bullish. It does look like this is a little consolidation within an ongoing upward trend, and the longer term picture for oil is still really bullish. The strong bullish divergence between price and on-balance volume offers quite a lot of support to a bullish outlook for oil. On-balance volume should be read as a leading indicator. Where it goes, price may lead, with on-balance volume making a new high above this point. It should be reasonably expected in following months that price also will make a new high above this point. For the last 3 months, price is essentially moving sideways, and it's come with declining volume. This is pretty typical of volume during a consolidation. There is still plenty of room for price to rise or fall. MACD is still full bore bullish. What about the weekly chart? Here's our consolidation. Resistance about 75.25, support about 64. Swings from resistance to support and back again. At this stage, price found pretty close to support, slightly above. It looks like we've got the end of a downward swing here and the beginning of an upward swing here. ADX tells us price is not trending at this stage, and so let's expect it will continue to consolidate until proven otherwise. As price is moving sideways, volume is declining, really typical behaviour during a consolidation. It certainly does look like price is consolidating, and ATR is flattening off. On balance, volume has a new range, but neither of these trend lines has reasonable technical significance. This one has only got 3 tests and it's got a reasonable slope. The strength of the slope reduces the technical significance. This lower trend line also only has 3 tests and has some reasonable slope. A breakout of this zone would be a weak signal either way. RSI is neutral, room for price to rise or fall. Stochastics is neutral, reached overbought for the upward swing, didn't manage to reach down quite properly into oversold, may not have gotten there, may now be returning up toward overbought. It's not perfectly assisting with support and resistance on price to tell us where one swing ends and the next begins. And Bollinger Bands are very tightly contracted, absolutely typical behaviour from them during a consolidation. It's all pointing toward a big consolidation, and it looks like it could be a big symmetrical triangle. We can now draw the upper and the lower trend line, and I've calculated another, I think it's 21 to 24 sessions will be a 73 to 75% the length of the triangle from base to cradle. That's the most common point for a breakout from a symmetrical triangle. But a word of caution about this possible classic structure here. The trend lines for the triangle are only just able to be drawn. We have to be a little bit flexible with classic triangles. We may have to, as it evolves, redraw and slightly adjust the trend lines. For the last few days, price is falling of its own weight, and we've got bullish long lower wicks at the support line here, so it looks like it's quite a reasonable expectation to expect a bounce here. ADX is telling us at this stage there's no clear trend. On balance, volume at the daily chart level has a new range. It doesn't have good technical significance though, because these lines are not often tested yet. But a break above resistance would be bullish, a break below support would be bearish, and in the first instance, expect that the resistance line will assist to halt a rise in price, and the support line may serve to halt a fall in price. ATR has been declining while price is essentially moving sideways in big swings from resistance to support and back again. Again, that's very, very typical behaviour of ATR during a consolidation. RSI is neutral, plenty of room for price to rise or fall. Stochastics did reach overbought for this upward swing. It's back into neutral. There's room again for another upward swing, or there's room for downward movement to continue here, lower to support. In the first instance now, let's look out for resistance at the triangle trend lines, and if they hold, we may well have a big symmetrical triangle forming. That's all for me at this today with your US oil analysis, and I hope that all of our members are having a most fabulous weekend.